going on? Hold on. Okay. Test. Bacon's here. Howdy, Bacon. Okay. So I can't believe it, but we have to keep yes, we have to keep making videos because he won't stop making this man won't stop. But I should just literally at this point devote my whole channel to just going after Paul because he won't stop. He's gonna and I called it, I said it in my community post. I'm like, he's gonna pretend that he never shorted Nvidia because he admitted in a private live stream for his membership only, so he can say that he did disclose that he got out of it, right? He never publicly disclosed that he got out of his Nvidia short. So, and now he's just going to completely forget and erase that he ever did it. And I said I'm like, he's going to cover Nvidia's earnings, and he's not going to mention it. Of course he won't. Why would you mention that you lost at least $10 million? Of course you wouldn't. You just erase all memory. I'm surprised he hasn't deleted he's too dumb to freaking know that he should delete like the evidence. But then again, nobody back checks this shit. So what does it matter? He's got 200,000 subs. Well, he posts. So here, let me I'll pull it up in a second. This is an older video. So he literally just goes through the earnings like it's just some random company he's like barely heard of, and he's going to say it's overvalued because he's a value investor, which is all bullshit. But so I'll show you. So I know he's out. He's out of his short like a week ago. So we created a Jesse and I talked to Jesse about kind of the dates and time frames of when we knew Paul did his short, right? He did naked calls on Nvidia. People still ask, did he short Nvidia? He did short Nvidia. I don't know how many times you have to keep saying that. He did 100% do it. He said he did it multiple times, and then he said he got out of it. So based on our best judgments, we assumed, because he said couple $1 million of premium collected, so we assumed $2 million of premium worth of contracts at money, and we knew the time frame was something between January and April 2023 when he did it. So we kind of like split the difference, I think, like February, March. When he sold, so this is from today, but when he sold, this is the total loss based on those assumptions. It was 10 million. So Paul lost at least $10 million shorting Nvidia. It's just stunning. And he's still doing videos on stock investing. He will never, and I've seen people online say, well, one mistake, everyone makes a mistake. You can't judge someone by that. What some crazy shit. Yeah, you can. The man lost $10 million at least. He could have lost more. He's irrevocably damaged his financial future. He will never recover from this. All right. He will never have positive returns in the market. He is destroyed. I mean, I've heard that his family's worth 100 mil. So he destroyed 10% of his family's net worth, maybe, in one stupid trade within a year. It's just stunning. And people still watch his videos. And then he just lies about it. Like a lot of YouTubers, he's just going to pretend this never happened. He'll never mention it again. I wouldn't be surprised if he starts deleting the comments, but we'll see. So let's watch his video for a minute, as much as I can tolerate. I do these videos. We have to keep posting this because people never look back. We got to keep telling people, everyone needs to keep the pressure on to tell people you've made a terrible mistake. Listening to Paul, buying his software, believing in his so-called fake value investing. We have to try and tell people, you got to stay away from this guy. He's going to ruin you. He's going to ruin you. And I've showed 2 portfolio reviews. I have another one coming. He fails. And you go look at my old portfolio. I'll link them in the description if I have to. He's failed to outperform in good years, bad years. Every year he fails. All right. In the 2 I've done so far. So in 2022, he failed. In 2021, 2023, he failed. It didn't matter what the market conditions are. He always underperforms. And he gets wrecked when he gambles on the stock market. I'm just like, I get so fucking mad. Like, and people still will. We're gonna get to one guy, which I can't believe some of the shit people say. But so here's Paul. This was on earnings for Nvidia. So this is hilarious part here. So for this part here, wait. See if you catch it.
Not fair, guys. In 2023, $57 billion in revenue. That's what Intel did. Intel just a little bit above that. I get it. Nvidia has way better potential than
He literally compared Nvidia to Intel. Guys, he compared Nvidia to Intel. Like, I'm stunned. How can you possibly do this? They're not even in the same, first of all, they're not in the same business. All right. Intel's trying to become a company. That's kind of where they're going. Nvidia is a fabless design company. Where the F are you ever comparing these two? They are in different businesses. So, but remember, Paul is all about value and his DCF. So to Paul, dollars are dollars. That's it. All he cares about, the dollars of revenue compared to dollars of revenue, net income to net income, the dollars. This is what he preaches. And I have to keep, I'm going to scream off the mountaintop. If you invest like Paul and you do DCFs and you say, well, this company should be worth more or they should be the same because their revenue is the same, whatever you want to call this type of investing, where he's just looking at like spreadsheets and he's doing formulas, you're going to fail. You will fail as a retail investor. This is not how you should be picking individual stocks. It won't work. I don't understand why people think this works. It doesn't work. Okay. You're taking past performance and he's drawing like these linear projections, like 10 years, 20 years forward in his DCFs. It's sheer lunacy to try and calculate revenue growth for 20 years or even 10 years is lunacy. It's so, and you're always going to be wrong. So your stock prices you get out of your formula are not going to be right. You should use this as a guidepost at the end of your investment thesis to kind of confirm what you already think, which is what I do, like what I did with Disney, right? What I've done with some other companies. It's the last thing I did. You will fail so hard investing like Paul. Okay. And he could have a few winners here and there, but hardly. They don't compensate for the underperformance of this type of investing. So I don't know what we call it, fake value spreadsheet warriors, but it's not going to work. And we can look at the input or the outputs that he put in. So let's go to the actual calculator. Let me see if I can get him out of the way. He needs to move his freaking face. Okay, wait. Okay, here we go. So he just did this. He's projecting, first of all, 10 years. You're doing a 10-year DCF for Nvidia. That's clown country, dude. Like clown country. Are you kidding me? 10 years. Where do any of us know what it's going to look like in 10 years with AI? And we could have robotics and we could have self-driving. I doubt it, but we could have that. The whole world's going to be different in 10 years. Why are you projecting 10 years forward? And then secondly, revenue growth, 10, 30%. Like Nvidia is growing at like 300% revenue growth. I think they're growing their net income at 700% right now. It's a freaking unstoppable freight train. Okay. How long is this going to last? I don't know. How long is this AI buildup going to last? That's what everyone wants to know. Nobody's going to know. All right. So we're in this transition. We're in a worldwide infrastructure transition to this newer artificial intelligence future. So the sky's the limit with Nvidia to project 10, 20, 30% revenue growth. Like, mother of God, like, why are you doing this? Like, why are you doing this to yourself? And we'll go back to what he input a year ago. So remember these inputs. And then desired return. Okay. Let's move your stupid hand, dude. Desired return, which is always laughable to me because the way he does it is just makes no sense. Like risk adjusted return, basically. But he makes two calculations into one, which is really weird. But why are you even calculating 10%? The market returns about 9%, give or take. Why are you even doing this? You shouldn't even buy an individual stock. Like, you should be trying to hit grand slams with stocks. And if it's not, you should just buy ETFs and be broadly diversified. Like, why are you taking individual stock risk for a 10% return? I don't understand. And even top of this, 16, it's like he's trying to create, you're making the numbers fit your narrative, is what you're doing with a DCF calculator. I don't think you're really facing reality when you put these inputs in here. And you just throw inputs in this calculator like it matters. Like, this is such a joke how to do this style of investing. You will fail. You will fail spectacularly and you will underperform. I don't understand why you would invest like this and not just buy like the S&P 500 or a broadly global diversified index fund. And then you could take a few shots on your core competencies in individual stocks, things that you're competent in. How many of us are artificial intelligence engineers of some type that work in this field? Like, this isn't my bag, so I buy Nvidia through diversified indexes. Why do you have some sort of advantage then over it? I doubt you do. But to Paul, every company in the world is the same because they all deal in dollars, and all he cares about is the dollars they earn, the percentages they create. Nothing else matters to these style of investors. They don't care about the future. They say they do, but they don't. They don't care about what the future prospects of the company are beyond just throwing in random percentages. But I just makes me sad that this exists. And when I see people in his comments praise, I think they're bots because I find it hard to believe anyone falls for this, but people do, and they praise him and his teachings, and it like hurts me like inside that I'm like, poor retail people, like, why are you doing this? This is not how you invest in individual companies and succeed. And I know people that have hit major home runs with individual stocks. My friend has been in AMD. I have two friends in AMD. One of them really nailed it. The other one was in a little bit later. They were buying it in the $20. It had nothing to do with DCFs, right? It was they used the product, they understood at the very early onset the advantages AMD had to Intel because we built our own computers. So they were users, they did their own research through PC trade, PC mags and stuff. The ground on the ground research got them to that investment that was $20 and now it's like almost 200. All right. So that's like a Peter Lynch style investment right there that I just told you. That's like how you can succeed. And I've read the stories of other people early onset with Nvidia. Some of them it's a combination of luck. Some of them it's actually they understood where this was going. But none of them I've ever seen talked about like, oh, I threw the numbers in a DCF formula and it told me it was a buy. So I bought it and I 20x. Like anybody on Wall Street can create this shitty. I built this in an evening. All right. I built my own DCF. I did it like in 2 hours after work one day and I was half tired. This is not hard to do. For you to pay him $30 a month, this is like middle school level math that you're paying this man $30 a month for. $30. If you can't build this DCF, I don't know why you're even investing in individual stocks. Because this is not even hardly advanced investing to create a DCF. And if you can't do this, what are you doing? Just buy indexes. But you're gonna fail. You're gonna fail, but you'll never admit you fail. Because nobody admits. You're just going to keep on underperforming with Paul and then thank him for his teachings that make you friggin' just get killed by the market. But he doesn't mention the short. He just wants to tell you, and he does this whole spiel about how under or overvalued in this video. It's unbelievable. He's still talking about how Nvidia is like expensive, overvalued stock. He hasn't even given up. The man lost over $10 million, we think, and he still won't give up. He still will not give up on this fallacy that investing in individual stocks is just about the numbers and you can just plug in DCF. Value investing is what matters, whatever he tells you. It's all bullshit. It's all bullshit. All right. When I bought Disney, the last thing I did was do a DCF. Okay. The first thing I did, I identified what did I need to see Disney to do to pivot the business to get me into it. Same thing I did with Cigna to a certain degree. And some other things I've bought. Forward looking. I'm not looking at the past, ideally. I'm looking at the forward prospects of the business. I have a drone defense company. It's really small. I can't talk about it, but it's done really well. It's all about forward projected, earnings and where I think the company's going. I'm not looking at the trailing 12 months and doing DCFs for 10 years on a linear projection like this. This is fucking terrible. It's terrible. And it sells on YouTube because it's easy to present. This style of investing is very easy to show you on YouTube. It's very hard to tell you, like, to try and do a video to explain something like what I've done. I can't do it so easily. I can't just talk for 20 minutes and show you a spreadsheet and then trade. Woo! I can't do it. It's hard. It would be hard to explain some of it. He can pop these videos out in 20 minutes, and there's other channels that do this. This is why it's easy to produce content but it's so valueless and it gives you this perception that it is of value to you. Um, but it's not. It's really not. Okay. Like I've never heard of anyone hitting really good investments doing this. I've never. I've had people around me do some really cool things, spectacular investments, and I've never seen anyone do it starting with DCF, plugging numbers into that, and then they realize that's what they should have bought. Um, it's just frustrating. Yeah. Oh, I'm sure he wants to buy Google now. I heard the stat today that Nvidia's market cap equals Canada. I think it equals China, actually. But like I said this at the beginning of the year, the, there's they're the only company in the world that basically sells these chips for now. So I'll go to the other screen. I said this could be $1,000 stock, no doubt in my mind. It could be $1,000 stock because the unless the narrative breaks, which means like on an earnings they talk about slowing growth. But right now the narrative is the world is transitioning to this new infrastructure, and he even says it pretty well in the call. So if I go to, I think this was the earnings call. Hold on. I don't know if you can hear my kids are singing in the background. Where was it? So here's Jensen's first statement from the call. So the CEO of Nvidia. So fundamentally, the conditions are excellent. Continued growth, calendar year 24, 25, and beyond. Let me tell you why. We're at the beginning of two industry-wide transitions, and both of them are industry-wide. So if you invested like Paul, you wouldn't even understand this because you just plug numbers in, and that's all you paid attention to. First one is a transition from general to accelerated computing. General purpose computing, as you know, is start to run out of steam, and you can tell by the CSPs extending many data centers, including our own for general purpose computing, extending the depreciation beyond 4 to 6 years. So this transition, he's saying, is accelerating. All right. So everyone that keeps saying this is a bubble, he's telling you this transition is accelerating. It's not a bubble to imply that this is the top just because the stock's expensive. Okay. And he's talking about, he goes into like, he nerds out on these calls, talking about they're perfectly situated for this transition, with GPUs being the important thing to upgrade, not the CPUs of computers, to get you this accelerated computing. I'm not a computer engineer, so that's all I'm really getting into it, but I get the thesis to a degree. So we're in this huge worldwide transition, right? And I would play it a different way than Nvidia if I was buying individual stocks, but that's my perspective. But I'm still thinking about other infrastructure plays in this space. So, but like Paul doesn't. This was there. Like some of this was already there when Paul shorted Nvidia, and it's not part of his thesis. He's just going to plug his numbers into DCF, and literally that's what he does. If he tells you he does more than that, I doubt it because he's never shown it online. You could listen to this call and like he's telling you where the industry is going. The CEO of Nvidia. Who here? Gil is here. What's up, Gil? Jensen has big D energy. He really, dude, he's a freaking him and Lisa Su, man. Oh, if I could go back to like 2010, I'd just dump all my money into AMD and Nvidia because those two are rock star CEOs. So if you're gonna trust one of these companies, like you got to get the ones that have the friggin' rock star leadership, I think is important, especially in this type of space. But I've bought and sold AMD over time. So I'm always open to buying AMD again. But right now I just have my large cap growth fund and cybersecurity. I'm debating some sort of fab ETF to just buy like 2025 fab companies. I have KLA still, which I'm really happy with KLA. I'd love to buy more, but it's doubled on me since I bought it. So I'm at a tough point. I don't like to dollar cost. I don't like to increase my cost basis. I really don't. But I had KLA at like 350. But like, there's a lot to think about with where this space is going. And just to base your investments just on your trailing 12-month analysis, then you project forward 10 years based on that is just fucking so dumb. It's so dumb. Like look at So we can go here. So this was okay. So we'll show this is probably about when Paul was thinking about shorting Nvidia, January 19th, 2023. Okay. I think this is when he started. I think I have a video where he was talking about it in December 22 with Mo, and then there's a few videos January, early February. I'm like that he was thinking about it because you can kind of hear him talking. So I think that's when he did it, sometime in February of 2023. So this is like right before it. So we can go to his projections. So this again was this was when Nvidia was, you can see, like $160 a share. Okay. So let's look at the freaking numbers he puts in. Wait, does he show it? I need to go up. He's just such a garbage guy. Okay, hold on. Okay. So we got look at this. Guys, this is if you ever could show someone the sheer insanity of investing like Paul, look at what he had Nvidia's revenue growth in January 2023. Okay. 3%, 5%, 7%. He did a 20-year analysis. 20 years. Like my jaw hits the ground. We were at the start. This was the cusp of the AI transition. It's not like this is unknown that this was coming. There were people that were writing about this. I found stuff all the way back to 2014 talking about this transition coming. And just Paul is just so incompetently like, and he won't admit it. People in the comments will always say, like, your type of investing does not work with technology investments, which I've said from the start, but now I'm just like, it doesn't work for anything. The DCF he uses, you could argue the one case that it maybe would be useful for a like investment thesis would be like a boring consumer staple company where you have pretty consistent revenue, very slow growing, like Coca-Cola, Procter and Gamble. Maybe you could get more use out of this type of investing than a cyclical, you know, technology company with that has cycles. And yeah, they can go from minus 40% growth to 300% growth in a 1 or 2 year period. These types of companies, depending on like where they are in the technology cycles, like his style of investing is so incompetent for assessing technology companies. I mean, look at this. Look at the values he put in this. This was Nvidia before it boomed. And he's saying 5-7% growth. Like, so he's assessing growth that's the equivalent of it being like Coca-Cola. Because that's probably what you would assume like the growth rates for Coca-Cola are. Probably 3 to 5%. Cigna, a boring health insurance company. I assessed at 3% when I bought it. When I did my calculation of Cigna, I did 3%. Okay. He's assessing Nvidia at the same growth rates that I did for a freaking health insurance company. Like, this is embarrassing beyond belief. Beyond belief. Don't let him tell you he made money on Intel either, because he was buying Intel in the 50s, 60s. But I'm just gonna stare at this in a minute. It's just like, this is so bad. It's so bad. And I don't know how you could trust this man. He's so terrible at investing. I'm not gonna say I'm like a genius on the markets. I've done pretty well. Um, I'll be able to retire at 55. McDonald's, Lockheed Martin, been some real winners. KLA's been great recently. I think Tractor Supply will be a great winner for me. But like, none of those are based on DCF modeling, those investments. None of them. All right. I used it as a piece of it, but none of them were based on evaluation. Cigna, you could say, was the closest to, again, because remember what I said, Cigna is a slow revenue growing company with pretty stable, consistent gain revenue. So it kind of worked for that thesis. Now, if I didn't get scared off by the Humana merger, I would have freaking crushed that, which I'm pissed. But you know what? You make your choices. I didn't want to get into a merger battle. He's making a separate mini fund. Oh, you know what, Gil? I'm looking into that right now. I'm looking into Kevin's mini funds and his warrants. I'll probably do a video maybe like this weekend or next week. There, what I find, I'm like, there's got to be some new filings, because I have the original filings for House Hack, which was when he first brought it public. But I'm like, there's got to be new filings to document like this change to the structure of this investment for the people that gave money. I can't find it. So I'm trying to wait till maybe I could find it. Maybe he doesn't have to update his filing, which seems like crazy to me, but I guess. I okay, first of all, there's no such thing as a mini fund. He's trademarked that term. So because I'm like, what the hell is a mini fund? And I can't, and then I hit me that he's trying to trademark the term mini fund because you can see there's a TM next to it. There is no trademark for mini fund, though. I checked that. So it's again, Kevin is a really good salesperson. This is all about sales and showmanship. That's all it is with Kevin. And I'll get into that in a separate video. But so here's Paul. There's Paul in all his glory. This is missing out on 7x Nvidia because he projected that they'd have 3 to 5%. And wait till you see the prices. Wait till you see the prices. So this was probably why he shorted it, because so this is January 23. Nvidia, I think, was 160. It said at the top of, yeah, where it is. Current price 168. So his formula that's saying Nvidia is going to grow at the same rate as a health insurance company. Low projection $33, high 75. I'm telling you, this is why he did it. It might be this video. He shorted it because of this. The most clownish thing I've ever heard is shorting a stock based on valuation in general. And then even his project, but at least if you used good inputs in your DCF, it's embarrassing, but not like this level. This is like peak level embarrassing of investing. And he, deserved to lose $10 million because of this. So there you go. He thought Nvidia was a $50 stock at the cusp of the AI transition of the entire world. The only company in the world that sells their product, basically. That's why I said Nvidia could be $1,000 stock by the end of this year. There's no competitor. Right now, Nvidia has the GPU and the software, the software to go with it. There's no competitor. So, if you want to be part of AI, you got to pony up to them and pay what they want. AMD is just not. It's not even close at this point. AMD will do well, but they're not a true competitor to Nvidia. They're kind of doing their own thing. So at some point in the future, this will end. Yeah, for sure. And nothing lasts forever. There will be an end to this. But if you want to, for you to think that you can project when Nvidia is going to hit the top of this cycle where everyone just wants to buy billions of dollars. People are terrified of running out of Nvidia GPUs, so they're ordering probably triple what they need because they're terrified when they do need it, they might not be able to order anymore. So there is all this mass order. But for you to think that you can time when that's going to end, I think you're making a terrible mistake if you think you know that, unless you're some insider. But so you don't have to say it's a bubble. I find it hard to believe to say it's a bubble. This is a real company, makes a real product. They're profitable as hell. They're increasing margins. They're dumping lots of money into CapEx to keep this going. I mean, their CEO's a rock star. This is not like some bullshit AI company that's unprofitable or something like C3 AI. So the whole bubble talk is kind of ridiculous anyways, but at some point, this cycle will end of all these mass orders. They'll either get competitors or people will slow down orders. Maybe there's a recession where companies have to cut back on spending, but crash again. Like, could the price go down a bit? Yeah, crash. And what were you saying, like an 80% drop? Again, like based on what? And I think it's pointless to say things like that. It really, and again, I actually short companies, so I know a bit about shorting, and like there's no value to saying it's overvalued. Okay. Like for what? How's it going to end? Can you time it? I don't think you can. And you probably shouldn't. EM got wrecked. He got wrecked beyond belief. For him to do another Nvidia video is stunning. It's just stunning. I can't believe it. If Paul, okay, somebody in the comments of his latest Nvidia video, there's somebody that commented that they started a small fund where they started inversing. Maybe they just made it up, but someone said in the comments that they inverse whatever Paul says. So if Paul says it's a buy, they would, or if Paul said it sucked, they would buy it or something like that. He said he's done really well with it. So I'm telling you, you could probably have made a lot of money inversing what Paul does. For sure, dude. Only BSSE is Nvidia overpricing. I mean, yeah, they can charge what they want, right? The sky's the limit. There is no competitor. So if they want to charge $40,000, your choice is either to not get on board and get behind your competitors or to buy them. That's why this company's a rocket ship right now. And here you go. Like I can look at the quarterly revenue. I mean, this is crazy. Um, but for Paul to think that you could project this. So again, in January 2023, he was projecting 3 to 7% revenue growth before he shorted it. Like, look at this thing. The last few quarters, 100%, 105% growth, 165% year-on-year growth to freaking revenue. And then we can go down to net income. Where is it? Sorry, there it is. Look at this. 26, 800, 1,200, 768% increase on net income growth. They can just charge. You can look at, and so that tells you, right? Net income is accelerating faster than revenue. And so obviously, like they can charge what they want for these things at this point. Like look at the revenue just going, or the margins just going like vertical line almost. It's crazy. So another example of why this DCF stuff is clownery. I don't get him. I don't get it. There is a purpose for it, which vaguely. I mean, I guess if you want a DCF model Coke, I don't think you should buy Coke if you're 20 years old, honestly. I think you should just buy an S&P 500. I failed to see when Coca-Cola will outperform the market. So I think you're wasting your time. But nonetheless, Paul is just a complete freaking idiot. And like in his video, he compared Intel to Nvidia. Who on earth would ever do that? Like here's a chart for you. This helps a lot of. I found this pretty helpful. The different types of fabs, right? Nvidia is a fabless design company, right? Taiwan Semi makes all their chips. Intel, integrated device manufacturer. So they used to design and manufacture their own chips, but now they're transitioning where they're going to like design in-house chips, but also they want to do fabs for third-party developers, which we'll see, right? We'll see if it works. Their valuation indicates a lot of people think they'll be successful because it ran pretty well the last year, which I have my doubts, but short term, it seemed people believe it. So, hey, Cole's here. Maybe instead of hating on others, focus on your own success. Really, Cole? I, my friend, will be retired in 14 years. So I can't wait. As soon as I retire, I'm selling my house and I'm going south. So that'll be fun. The only question will be where I'm going to be on a beach. That's all that matters. Check the comments, see if there's okay. Let's go. Okay, let's see.
With this recent,
let's see what we got here. I've never met a channel that's gotten so many predictions wrong on stocks and avoided stocks that mooned. Yep. The word's getting out. Like, thank God. So hopefully people are making a difference. It's not just one. It's like there's I've talked to some other channels. There's some other there's some other channels that you might not know that are covering this. The Nvidia short really highlighted their clownery. So I mean the word's been getting out, thank God. What else? Listen to Paul and Mo if you want to lose money, or sit and watch while everyone else gets rich. Stick to real estate, Paul. That's another video I'll have coming up at some point. I don't understand all these real estate guys that think they can be stock people after they dabble in real estate. Do you ever notice that? So it's Meet Kevin, it's Paul, and then it's Spencer Cornelia doing like these grifter exposing videos of investment people that he has no competency to do. So it's all like, I don't understand all these real estate people that think they want to get into stonks and valuation. It's hard. Just stick to real estate. Like what if you're good at real estate, great. I'm happy for you. You never overpay for a good company. Okay, fucking stupid. This guy's a clown. This tortoise investing guy. He's such a turd. Nvidia is amazing. Coming too expensive for my liking. I'm not going to short it because I'm not confident enough. You can say a company's overvalued and you don't have to short it. So I don't know why when you say a company's expensive and somebody always in the comments will be like, if you think it's so expensive, short it. Like you're a clown saying that. That's ridiculous. Shorting something is a separate conversation from saying it's overvalued. All right. There's a different reason you would short something. Go read a Hindenburg report. Please tell me when Hindenburg ever shorted a company because of valuation. Okay. When? Or one of the other short firms. Go read those. Why do they short companies? Like there's something fundamentally flawed with them, or there's a misstatement, something material in the account, the accountants found. But again, I already covered this. Kevin shorted Costco, got, lost money, just like Paul shorting Nvidia. Here we go. Valuation. Um, who else? Somebody else was shorting something I saw recently based on because it just jumped up. Um, I own Nvidia since late 2022. It's the real deal. Nobody can say any different. I'll be buying more. Yeah. Yeah. It's doing amazing. And the narrative and the story of Nvidia has not been broken. So saying it's overvalued is meaningless. Doesn't mean you have to buy it or short it. I'm speechless, Paul. So are we all. Dust in the wind. We are all speechless. If you guys want to miss on money, just watch this channel. There was one really good comment. Yeah, here it is. Imagine shorting the best company in the world. That's what I would say. Tell me a company that's a better investment than Nvidia. Like this is the investment of the world right now. And they shorted it on a 3 to 7% revenue growth projection. He shorted Nvidia. Like holy shit. So yeah, remember Paul saying a year ago Nvidia was a $50 stock? We just showed the video. So January 2023. Yes, his middle evaluation was $50 a share for Nvidia. Fucking clown. Definitely a bubble. It's not a bubble. So, anyways, I love this. Makes me laugh. Dude, like Paul's not gonna debate. He's gonna go, I'm the LeBron James of investing. Really? Well, he loves to lose money, that's for sure. Nobody could possibly hold a candle to Paul. He's underperformed his whole life in investing, and he just lost $10 million. Like Jeremy, none of them. It doesn't matter. Jeremy, it's not even close. It's not even close. Freaking Paul is the worst investor I've ever seen on YouTube by far. You can't even argue. The man lost $10 million. Okay. Like it beats everybody. I mean, you could argue Kevin probably lost millions of dollars too. Although he says he got out when he saw the 2023 recession, which is lies, but real estate guys and stocks reminds me of the shoe buckle story. A guy becomes a millionaire selling shoe buckles and then starts to find his friends. Yes. I don't understand. Like, if you're good at real estate, why can't you stay good at real estate? Why do you have to feel like you need to become a stock guru and you have to start like quoting Warren Buffett and then you start quoting Peter Lynch and you never read the fucking book because like literally over half the people that freaking quote Peter Lynch are wrong. They're just wrong. I don't understand why they do it because they know people know his name, but they don't fundamentally understand Peter Lynch. Reminds me of the Tesla shorts. Yeah, like, cause yeah, when Tesla started running, I remember, yeah, when Tesla started to run from March 2020, the big run was that first year. And I know there were a lot of shorters, but like, look, a stock can vertical line when things are going their way. Tesla's revenue is kind of the similar to this. Tesla's revenue was it was accelerating, right? So everyone's like focused on the price to earnings ratio at that time, but it's like, look, the company's growth numbers are accelerating. They're not even like just beating earnings. It's getting faster. That's why the stock went crazy. And these value guys don't get this. They don't get it. I don't understand why they even buy companies or short companies in technology. If you're investing, like if you're a value investor, why are you buying these companies in the first place? Why are you shorting these companies? Why don't you stick to like your competency with that type of investing? Maybe you could do well in, some boring old consumer staple companies. And then I'm like, well, why don't you just buy freaking S&P 500? If you want to invest like that, why are you wasting your damn time anyways? I keep saying like, I'm pushing towards a core satellite. Your core is like a low cost, broadly diversified index or two or three, depending how you want to do it. And then you have this, sliver of your portfolio where you can take some shots at grand slam investments, like Nvidia. But investing like Paul is just, you're going to lose. You're just going to underperform. You're going to lose on shitty value stocks. Look at 3M. I made fun of him for that investment the whole time he owned it. And some people told me, if you look at valuation, it's a great buy. And I'm like, uh, investing in individual stocks is about future performance, right? You want the companies that are not just growing, but accelerating growth, let's say, right? Or some future prospects where the addressable market's improving, stuff like that. I thought 3M was a clown investment when he did it. He didn't even know about the lawsuits about the forever chemicals. So, and here it is. I think it's just breaking even for what he bought it. It's just hovering around $90, $100, wasting his time while the market's like gone 20, 30% freaking since then. And here he is buying, 3M, like a garbage company like that. But imagine the opportunity cost, you lose 10. Yeah, he will never recover from this. Never. And you can't recover from a $10 million loss like in investing. I don't know why at this point just quit, because you will never beat the market. He could pretend he will never beat the market. He's going to say he does. You should just quit, put all your money in the SP 500 and just be done with it. You have failed. You suck as an investor, which is fine. A lot of people suck at investing. No problem. Like, just buy the S&P 500 at this point, Paul. Like, you're a clown show of an investor and you'll never recover from getting wrecked. Worse would be if he tried to get the money back by doing another friggin' contract or some sort of derivative play. And then you just accelerate your losses, because a lot of people have lost. There was a book I had from Malcolm Gladwell where he talked about, I got to find the book because it was one of his early books, Malcolm Gladwell. It was about like the effect of losing on people's psychology. It was so fascinating because people will avoid loss to an insane risk degree. Like, and then when they do lose, people have this mentality that they just have to get back the loss before they exit, even though everything tells you need to just bail on this in whatever decision you made in life. Get out, you made a mistake. But people have this mentality where like, no, I'm in it till I get my money back and then I'm out. It's like, you might never get your money back. Okay. Like, I got to find that book because I've actually it's not an investing book though, but it was an interesting portion of it. If you're going to buy SPY, you might as well buy the QQQ. Yeah. I mean, I consider QQQ like a satellite holding. I wouldn't call it a core holding, but people can disagree with me. Value investing will always work, in my honest opinion, but yet, why do you think value investing will work? That's what I want to know. Because the idea, I think what you probably are going to tell me value investing is probably more like quality investing than value investing. But the idea that you can buy these dirt cheap, near death companies and then say that it's, the valuation's low and I'm going to turn it around. What a lot of these value investing channels do, they start buying these single digit PE companies, or they buy 3M, right? Or Raytheon or something like that. Like these boring, uninteresting, non-growing companies with no really interesting prospects in the future. I don't see why you should invest like that in the first place. You could buy the S&P 500, all right? And I don't see how you're going to outperform with value investing. I'm sure you could tell me you don't do what Paul does, you do something different. But the value investors I see on YouTube, and I'm not a value investor, so I'm like looking at it from an outside perspective. I don't understand it. I don't understand why you'd invest like some of these clowns. They focus on past performance. They plug the numbers into a calc because they all have these really elaborate DCFs. They plug it in and then they say, look, I can buy it. There you go. You know, a lot of them get into, a lot of them buy like freaking Walgreens. I see a lot of value investors buy Walgreens. Like, how's that done for you? Because it's always cheap. Look at that. Forward PE 666. Ooh, that's not great. I see value investors, a lot of them own this thing, right? How'd that do? A lot of value investors bought Intel years ago because it was cheap by traditional standards. They were buying it. I saw all these value channels from 2020 and we're buying Intel in the 50s. How'd that do for them? Right? So I just don't see how this is a winning investment strategy, especially when you have access to some great ETF products that are low cost and diversified. Like, I can get exposure to all the cybersecurity freaking companies in the world, and I don't even have to pick which one's a winner. I don't even have to understand exactly what they do. I can make an investment like this, and I've covered this. I bought this in October last year. I think it was somewhere around here. Because it was like, yeah, you could say it's luck, fine. Say it's luck all you want, but I identified that there was a great addressable market trend and the prospects for cybersecurity are going to be growing and accelerating because of the AI transition. You will need cybersecurity to defend against the nefarious actors in AI. Also, people using these tools are in good and bad ways. Law enforcement's going to use AI and develop these tools with these companies also. So, I'm up like 40% on that, or I was at one point. I think it's dipped a bit, but you have great products like this out there. You could make really cool growth investment plays without individual stock picking. If you don't have any competency to pick the exact stocks you think will do well. I know people that do know, and they are able to pick which ones will do well. And so far, they've been right in cybersecurity. They have picked the winner, right? But I don't have that competency, so I've played it in a safer way for someone that doesn't understand, but still can get the gains. But I don't understand value investing because you could look at like CrowdStrike. You could look at CrowdStrike by conventional metrics. This is an expensive company, and it's been for a long time. So if you threw this in a value investing formula like Paul, this probably would never seem like a buy. This is a great company with great attractive prospects going forward. I think their growth could accelerate. And you're not going to be part of these if you invest like Paul. You're just not. You're going to buy Walgreen boots. You're going to buy freaking 3M. You're going to buy Sleep Number. You're going to buy just all these garbage, uninteresting companies that I don't see how you beat the SP 500 with them. Crocs, though. So again, you have to separate low PE. This is where the due diligence comes in. Like, it's understandable why Crocs is so low PE is because it's a fashion company. They don't usually get great multiples. So investors, I'm assuming, are looking at the risks of these could fall out of fashion in general. So you can't apply this same standard to all low PE companies. I bought Ford when it was on its quote unquote deathbed. So I bought Ford when it was like $4 to $6 a share. Looked terrible. PE ratio was garbage, right? But there was a turnaround play with the new CEO, Jim Farley, coming in. There was, and I understood what he wanted to do with the company. And I'm like, this thing's being priced to die. And I don't think they're going to die. I think Ford will recover to some degree. And it did well for me. So, like, if you had looked at it, though, fundamentally just by the numbers, it would have looked like dog shit because you would have looked at the past 12 months of performance before Jim Farley came in and his plan, his vision for Ford. You would have looked at the previous CEO's performance in that environment and you would have projected that forward. And yeah, it would have looked like dog shit. That would have been terrible. You would never bought it. But if you had done some background, you could see, okay, this is there's something here, I think. Crocs, same thing. Crocs could work out really well. Things have to progress now that Hey Dudes is kind of in the rearview mirror because their leverage, the projected leverage they wanted to get to, they're almost there as far as paying the debt down. So, but this is where the hard work of investing comes in. And you're not going to get this from a DCF calculator. You're not. And I know one of you is going to tell me that you DCF invest on everything and you've done really well. Good for you. You're not going to show me result. You're not going to show me proof. So it doesn't matter. But the investment thesis on Crocs is definitely not from cheap PE. That's part of it. You look at the valuation and where it could go based on future prospects of the business. But again, why has Paul ever even talked about Crocs? You would think Crocs would almost be like everything money investment because it's cheap, right? But their growth can be kind of all over the place, let's say. I am buying a bit of 3M actually, but mostly I'm thinking quality stuff with a long runway. Like Nintendo just got crushed, dude. Like what type of investment in Nintendo or games? Okay, GameStop. I don't hate that one. What example person sit on? I don't understand the 3M. I really don't. How do you think 3M is going to outperform the S&P 500? Like honestly, how's 3M going to beat them? I mean, unless you want to tell me you're a dividend investor, I don't get it. It's such an uninteresting company in its current structure. I mean, again, there's things they could do to make the company better for investors, but they're not doing them. So I failed to see it. Agree that you can't just use simple metrics to make investment decisions, but metrics and DCF valuations are part of the story. They're the end of it, right? That's the thing. Paul does it first, and he's telling you that the DCF is a screening tool for an investment. And I would tell you, no, the DCF is at the end of your investment journey on a company when you kind of already have an idea of what the company needs to perform for you, whatever you want it to, whatever you think it's going towards. But how do you know the story of what you think is going to happen if you haven't done the research? Then you do the DCF. So, like, I had to understand Disney's, like, there was like 5 things that Disney had to have I wanted to see from Disney as far as like a transition of the business. I think I got 4 of the 5, and I got in at like 81. Okay. And now we're looking, what are we were at like 112 at one point recently. The business has turned. Um, you couldn't have looked backwards into their numbers and seen that coming. You had to listen to the calls. You had to get an idea for what Iger was doing, the fact that they raised prices on the Disney bundle and they cut spending. They also had layoffs at ESPN because they know it's not growing, so they're making it more efficient. Um, but I don't know. I can only tell you what YouTube value investors, maybe value investors for real, like the real ones, not fake YouTube ones. Maybe you have something, but the ones I see online, man, it's just hot garbage. I don't see how any of them outperform the S&P 500 doing that stuff. They're not hitting grand slams with any investments. At least the guys on Wall Street Bets have the opportunity to freaking hit, a 10x freaking investment. But like value investing, it seems just like a slow, lingering bleed to death of like underperforming, unimpressive companies that I don't understand why you'd own them. Um, are you high? They got crushed. They're doing great. Okay, good for you. You ever watch Sven Carlin? Dude, he's terrible. I've seen some of him. Strongman does more about him, but I'm not the most. I don't really watch all of his videos. I did. Okay, there was one if I remember. Yeah. Okay. Well, let me find it really quick.
Okay,
I think it was it ADM?
scientific.
Okay, this one. So he covers ADM. I don't watch a lot of Sven videos. He covers ADM right after the accounting scandal got disclosed. So ADM disclosed they did a file, I think it was an 8K SEC filing, and they disclosed that there's some accounting errors that are going to be coming, so forth. Sven immediately does a video on it, and then he does a valuation at the end, I think, if I remember correctly. I think he put an actual price target on the company, and I kind of hit him in the comment. I'm like, how could you possibly evaluate this company like 2 days after they just disclosed there are accounting errors that they're going to have to correct? Like, what the hell are you doing? And I'm like, that's so irresponsible. And people will be like, well, the guy involved is only in charge of this one unit that was 10% of the revenue of the whole company. So that's the max it could be. Like, how do you know that? How do you know that that's as big as this could go? I just thought like that was just poor. That was piss poor of him to do that. Um, and I did comment. I think he replied to me actually. ADM is suspected of fraud in their accounting practices, and Sven looks at the financials with no worry in the world of misstatement to think that about buying the stock. What a clown analysis. Well, I didn't know he responded. This is based on current info. Okay, again, so if he's a value investor, we're taking past metrics and we're applying them to future growth of the company. When this is coming, right? And you don't know how bad this could be. This could be really bad. This could be nothing, but you don't know yet. So for him to do any sort of analysis right away, I'm just like, freaking embarrassing. There's another company. I mean, this is more in my space, but you guys got me rolling on this now. But let me pull this up. So remember, Raytheon disclosed that they had issues with engines of certain engines they built. It was the I think it was the paint coating or the metal. I'd have to read it to remember. It was something related to either the paint coatings or the metal they used in their engines that could like flake. So they had to do inspections. So a lot of people just jumped into it, and some people asked me what I thought because I used to own Raytheon when it was it United Technology split up. I sold it like $100 a while ago, but I'm like, you don't know how bad this is going to get. The company is telling you their best assessment of how bad this problem is, but they don't know. Like they have to do continued inspections of these engines for the next, I think, 2 or 3 years to make sure that it's fine. If they don't find anything else, it was a great buy, right? When it dropped to like $70, if nothing else bad comes out and it's just what they disclosed at the beginning, you're going to do really well. If something else comes out and there's more engines and the engine inspections find something that leads to another issue and another inspection of something else, you're not going to do very well with this. So it's like same thing with ADM kind of. It's like, well, current information, yeah, it dropped, but it's not a steal. I think it's irresponsible of Sven to do that video, but that's my opinion. Stock goes down, so Dan says they're bad. Yeah, big pharma. You should have bought Merck, like I told you, big pharma, best pharma company. You don't listen to me. So that is everything money. I don't want to go too far off this. Oh, that was my workout plan. So, anyways, we'll just keep the pressure on. That's all we can do. We can just keep talking about how terrible an investor Paul is. Just complete shit. His brother's going to disown him, I guess. It's like they've split up the trust fund, which why the hell did the family have one trust fund to invest in? Again, this is so odd. Like, I don't commingle my funds with my brother or my parents. Like, what are they do? What are they fucking doing? Like, I think they commingled all of it, like even uncles and stuff. Maybe it's cultural because he's from Iran. I get maybe it's just how they function. But ooh, I mean, you shouldn't be freaking gambling your family's money if that's the case. It should be really boring. ADM is a gamble. It's kind of problem. Yeah, I mean, in the end, you don't know how bad it is. So when it dropped like 20% that first day, it's like nobody knows anything. So you're just saying, I don't think it's that bad based on nothing. Just gonna gamble. Maybe you're right. Right. So the people that gambled on Raytheon so far have been right because nothing else has come out. So for now. But we'll see if ADM. I don't even know what it's done since it got tanked on that news. Maybe it's gone up a bit since then. Big I know. I told Big Pharma for people. I told him Merck's the best big pharma company in America, and he just laughed at me for a long time. But in the end, I'm right. It's the best performing big pharma company in America the last like little bit of time. So, and I'm not even called Big Pharma. When my family asks me for financial advice and financial moves, I just tell them to go buy in. I mean, yeah, for people that don't give a like I can't even tell people to buy like a 3 fund, which honestly I think that's the best option. I did like the 5 different options for your retirement account. I thought the 3 fund is the best option for general purpose. I mean, somebody asked me about geometric portfolios and I looked it up and it was like literally rebalancing like weekly rebalancing of your portfolio. And like, I'm not going to say it might work. It's just, holy crap, that's a lot of work. So I thought the 3 fund, but then again, most people just can't even be bothered with a 3 fund because then you have to do like annual rebalancing. And a lot of people don't even want to think about that. So like Warren Buffett was right in those cases. Maybe you just go 90% S&P with 10% like short-term cash, I think is what he said. Wouldn't say bonds, maybe just 10% cash investment, like short-term treasuries. Just to take some volatility off the table, I guess. But that's probably the best solution for most people. I mean, Warren Buffett's probably right on that. Paul's baffling. There are good opportunities in many. Oh, yeah. Game over. Best US Pharma. What is best Pharma? I mean, pharma is a tough business. You can go look at my Pfizer video. You can just Pfizer just completely botched what they did with all the money they got from friggin' the vaccine. 30, I think it was, what was it, $34 billion was like the war chest they had from COVID. And they just pissed away all of it almost. I think most of it's gone now on just silly stuff. I did a whole video on it. But that was my argument because some people say a company be better off just holding cash than paying a dividend. I'm like, well, think about yourself. If you have a pile of cash, you'd probably do some stupid crap with it. So does a company because they're run by people. So big piles of cash can lead to stupid decisions by CEOs that want to do something, even if it's foolish. So sometimes it's better not to have large piles of cash at these businesses. So people start coming up with crazy ideas. I mean, same as anybody. Like you get a $10,000 bonus at work, like you might do something dumb with it that you wouldn't normally do. Well, so, anyways, thank you for watching. Keep vigilant. If you got to make fun of Paul in the comments, anybody in your family, at the very least, if anybody brings up Paul and everything money, like try and spread the good word just to stay away from this person. Please, like, stay away from this. Oh, wait. Okay. That reminds me. Okay, hold on a second. Before we go, hold on a second. And no, where'd it go? Okay. Hold on a second. Okay. I'm pulling up something. Where'd it go? Oh my God. I can't find it. Give me 1 second. Okay, here we go. I'm gonna point this guy out because he kind of annoyed me. But no, it was a live stream, wasn't it? Oh, this guy. So he admitted to using, let's play the clip first. Okay. Okay, let me go to, I think it's the second time he says it. Okay, we'll play the clip.
Clown, right? But then there's other guys out there, like say me, Kevin, everything money, whatever. Like I think you generalize that everybody is so stupid, right? So when I started investing, I made mistakes. Everybody makes initial mistakes, right? Especially if you're young. But it's not like a 64-year-old is following Jeremy and gonna put all their retirement into.
Oh, yes, they are. So that's where this guy is very naive. There are retired people that are absolutely making degenerate stock investments. Go look at the calls that Mad Money gets on Jim Cramer's show. Dude, like you'll hear these retired, like elderly people call in and ask about the most speculative garbage companies that you've ever heard of. And they will call. So 100% he's wrong. And retired people are degenerate as hell.
TTCF and then be broke for the rest. Like, I don't think that really
exists. We have evidence of that. That's
that's you're right. That's why I hate him. That's disgusting. But if a 22-year-old is out there and they put a few thousand in stock and it goes bust, like if anything, that's a good learning lesson. Like either they never go on the market again, individual stock picking, or they're going to learn from it. Like I screwed up in the beginning and I learned from it.
I think it's the opposite, because if you lose that much money when you're young, that is a massive opportunity cost because you are not compounding that investment in a total market index over 40 or 50 years. I didn't even buy individual stock until like 3 years ago.
Well, see, that's where, so like, I'll just take anecdotally my situation, right? I had 401k, I'm 41 now. I had 401ks, my whole life. I'm contributing to Roth IRA.
People are putting huge percentages of their portfolios.
Well, yeah, that's stupid, but that comes down to being. So I think that people that do that, like what you're talking about, I think they're degenerate. So if it wasn't in stocks, it would be in sports betting.
We agree.
They'd be blowing their money, whatever. So like, I don't necessarily think like, say, everything money is like ruining people.
Oh, did you hear that? I was incensed when he said that. Rob, are you kidding? If you ever watch this, you don't think everything money is ruining people. Okay. Like, first of all, yeah, I mean, they could. I mean, if people followed him into his short, they got ruined. But let's not parse words. Okay. There's Wall Street bets ruined, which we all know what that is. All right. You make 0-day or 2-day option plays, and you either make 10x or you go like 90% bust. But also ruining people is systemic underperformance over long periods of time, buying shitty value companies. So yeah, Paul is fucking ruining people. Like that's such a dumb thing to say. Paul definitely is ruining people, convincing them to buy Sleep Number, 3M, what other garbage that he buys? All these value companies that just Walgreen boots. What else is he? You know, and I'll do the next portfolio.
On a minute there, buddy. That's where we can have a debate here. Okay.
Ooh.
Everything Money. I used to like them. Okay. They seemed like they were super reasonable when they were first on YouTube. But then they started adding day trading and they started buying stocks, all of which plunged. They massively underperformed. They shorted a high revenue growing growth stock that's in a bubble. They did a bunch of degenerate crap that goes against everything that being a value investor
Or
stands
we're almost
for.
at the part.
Right. But like
no
they
sense.
say not, obviously they say not to follow them though. Like if you follow them, you're just an idiot if you're doing it on your own.
Dude, come on. I mean, so the whole point is they have a process, and that process helps you do well in the market over the long run to beat the market hypothetically. But
yeah, I mean, I'll be honest with you. I am in the basic thing, so I get like their little DCF calculator and all that. Because for me,
You gotta be kidding
like
me.
I know you can do it in Excel, I could do it too, but like I don't want to pull.
Rob, I don't think you can do it. Because if you could build a DCF, you wouldn't be paying Paul $30 a month. And again, so Strongman built their DCF in like an hour, and I think he spent most of his time doing like dick pics. I built it in like in an evening. I built a DCF after I worked all day, went to the gym, came home, tired as shit. I still could build one. So for Rob to say he could, but he chooses to pay $30 a month to not do like 2 hours of Excel math, I don't think you can do it, Rob. Prove it to me.
In the information for every single company and type in it. Like I want a quick, like dirty way I can like screen it. That's basically what I use it for. And to me, like,
Did you hear that? It's right here in the transcript. So I use it because this is probably what I'm sure this is like 95% of who buys Everything Money software. So here it is. If you want to know who buys Everything Money software, how could you buy it? This is who buys it. I wanted a quick and dirty way I can like screen. That's basically what I use it for. And to me, it's like I don't go to the bar, so it's not a big deal to me, my situation. I mean, so this is who does this, if you want to know. So Rob is bored, he doesn't go to the bar. He's too lazy to build a DCF that he says he could, but I doubt it because math is hard, even though it's middle school math. Literally is like middle school level. So but he's going to pay Paul $30 a month. You're going to trust a guy who underperforms always. Good, bad markets, always underperforms, bets $10 million gambles, loses family money. But you're going to trust that man with your money to trust his software. And you don't even know what the formula is. I've seen people ask, even, where do they pull the data for Everything Money? So you trust his freaking software, right? People have asked him, okay, what's the aggregator? Where do you pull your financial data for it? They won't say. So I don't know. They don't, where do they pull the data from? How do you trust it? Because they won't tell you. What's the formula they use for DCF? They won't tell you. But magically you believe them. You trust them with your own money. This complete degenerate idiot investor that's just terrible. And you trust him. And Rob will be like, I just use it though, just as a screener. Okay, you shouldn't use it for a screener either, Paul or Rob, whatever your fucking name is. Using it for a screener, you're backwards. Like this is not the way you pick individual companies. So freaking clown. I couldn't stand when he said that. And I got in a fight with him in the comments. I'm like, Rob, you're terrible. Why are you stop picking individual stocks? If you use Everything Money software, why? So, okay, just go like 95%, be a boglehead. At least, piss away 5%, there. At least you're not destroying yourself. But that like when he said that, or strongman, like, dude, you won the debate. As soon as he said that, like you won. There was no need to have any more debate. When he admitted that he uses Everything Money software, I think, how do you come back from that to say anything? Like you're a disgrace to retail investors, Rob. Do better. But it's so funny. Oh, you ever think see the market turning again? Shorting Nvidia, supercomputer universe crash. Oh man. Everything Money info comes from Morningstar. It got leaked in the software when I was there. Oh, interesting. I mean, that's where I would assume that a lot of, because they do, Morningstar is I think the go-to aggregator for the data. So that's why I know, I think Fabio said when these services get bigger, I think it's cheaper for them. I don't remember now. I don't want to say. Interesting. Paying you for a debate is also an opportunity cost. Yeah, I mean, anybody here, if you want to go on Strongman's channel and debate him, I think it's $100 is the going rate. If you do decide to debate him, I'm going to rip you apart in the comments, most likely, if you say shit like Rob just said. Like, which is interesting because Rob is probably, Rob's a normal, everyday dude. I'm sure he's probably a nice guy to have a beer with, but but then you want to go tell everyone that you use everything money software. Again, you don't know where it came from. You don't know the track record of Paul. You don't know anything about him. And you're still going to use the software because you'll say it's not a big deal, but it is a big deal. He's an investing clown and you trust his software that he can't even beat the market with. So why are you paying him $30 a month? But here you are. Let's go, Gil. Take it. Oh, do we got another debate on the horizon? Gil. Gil's QQQ versus Strongman's VT. Oh, shit. Weston, you're so. Who is this? Beater Stocks. A nice troll name. You are so toxic, bro. You literally cherry pick 3 to 3 months. Results are cringe. I don't know where you're going with that. It's kind of a weird thing to say. Oh, there we go. Thank you for listening. Stay away from everything money. Yeah, he could have put $30 in Dex. It'd be better. So, do we dare have that? Do we do another Lafufu stock comparison? Maybe I'll do the Excel sheet. I'll put it up. We'll compare. You might not like the results of that one. Oof. But thanks for listening, and we will see you next time. Thanks.